wanted to do that. And as his nervous laughter told already sold, he has no reason for that. Enjoy.
Thank you for making it really hard to start with explaining activities on the dark side. But so warmly welcome everybody. Nice to see all of you joining in. My name is Claes-Mikko, so Finnish Norwegian double name. That's a bit tricky, but really good to see you all. And we're going to discuss scaling and practical steps. So it's tricky times, but those companies that actually reach the wonderful period of scaling, then this is the session for you. And with me, we have three really exciting funds joining in to share their best knowledge and experiences. So we have Atomico, Andreas Helbig, warmly welcome. We have Maxine Rior from Northzone, and then we have Fellman from NGP. So this is the group of expertise. We're going to do now 20 minutes of expertise, but we would like to share an information to start with. So we picked this panel purely based on the names of the panelists. So as we have here, we have Helbig. So Andreas, maybe you could start with, you're now in Helsinki, right? And so what's your plans for making it big in Hell as a Helbig?
Wow.
Sorry.
Wow. Well, I could start with sort of the very exciting fact that we're also kind of proud of, to be honest, which is that we're a proud investor in almost all Finnish unicorns as Atomico. I have to admit, I personally contributed nothing much to that because it was led by other people in the firm.
Well, let's give Atomico an applaud at this point for boosting up the Finnish ecosystem.
So the thing is, there's just pressure on me to continue on that streak.
Wonderful. Well, we're looking forward, and Helsinki is ready for all the big activities and talks. Thank you so much. And Maxine, and of course, you were born to maximize, so of course it's a cheesy one. I'm sorry, but what's your take on building and growing?
I think it is much more difficult than any VC could ever understand. And although I would love to say that we can stand up here and share our experiences, we are often asked kind of on our learning path as the entrepreneurs. So that's pretty much it for the learnings today.
Well, wonderful. We're going to, and of course, Northzone done a wonderful job, and of course, being really big, one of the biggest funds in Europe in this stage. So really excited to hear your best practice in this area as well.
Yes.
But then we have Fellman. So Fellman, it doesn't really resonate with the scaling and so on. Is it just a Finnish style of being a fund and looking at things realistically? Like failing is not bad, it's experience. So, Mr. Fellman, how do you look at scaling?
How we look at scaling, so I think it's basically three main buckets that we think about. So it basically starts with product scalability, go-to-market scalability, and then organizational scalability. So those are kind of the three main steps that we like to bucket things in, and then we can dive deeper from there.
Fantastic. Okay, so now the main reasons for you to join in this panel. So wonderful names, everybody. But we're going to dig into this. So we're going to do the three main areas. So we're going to discuss the timing, as that is quite crucial. We have more the administrative part. So how you see as an ideal for those companies to build up. And thirdly is, of course, the support, the outsourcing, what the companies need to do. And those who attended the previous sessions discussing scaling, we had Christoph from Smartly here just highlighting, and him simplifying the two stages of a company. So a startup, it's all about PMF, finding that product market fit, and then after that, it's if you find the product market fit, then it's scaling and trying to handle all. So it's these two parts. So maybe we could start with that. So the timing. So from the Northzone, because you do maybe in the earlier stage as well from this group. So how do you see that? What is the timing for actually scaling ready company for you?
I mean, I think it varies. I do think that product market fit is interesting because we tend to be quite harsh on when companies actually reach it. Like having millions in ARR does not necessarily mean you have product market fit. So really understanding when kind of you can put the foot to the pedal, if you will, and really just scale sales and marketing, that's when you know you have product market fit. I do think, however, you can scale before that, and especially make sure that you're ready for scale, because you very rarely know when you're going to take off, right? So being prepared enough that you can actually handle growth when growth comes, I think. And so I mean, it was a great question, but it's also kind of like how long is a piece of string, right? Depending on the sector and depending on the appetite of the company or the type of company they want to build or the founders. Some people scale, like what we see, I think in this market we see seed companies being actually able to scale. We see Series A companies being able to scale. And then we see these like Series B, C companies who are still kind of not really there. So.
Perfect. So how would you say then, do you have like with Northzone as well, so what would be the ideal? Let's take the investment period. So is scaling one of those crucial elements, or when do you invest?
You mean do we invest?
As a general, when you invest, so the expectation to see.
No, so I think we can invest. We always talk about, you know, at Series A you should have proven, like you raise an A on the back of monetization or on the back of product market fit, right? I think we try to not be as kind of boxed in, you know, for when we invest. I think it's totally fine to invest pre or post or like whenever we can see the scaling happening. Obviously scaling needs to happen during, you know, the time that we hold the investment, but it varies so much if we're investing into, you know, remote patient monitoring or a B2B marketplace.
Okay, well, it seems like because the flexibility is there, and then the whole team and all the panels here have been discussing the elements, when is it investment ready, but yeah, so let's get back to the scaling part, but that sounds like a good period of readiness to invest. So then from Atomico's side, so also being one of the larger one in Europe and having an overview of what's going on, so what's the ideal timing of investing and how much of scaling readiness needs to be there for the company already when you invest?
Yeah, I think a massive part of scaling readiness is the team. It's having like a proper leadership team in place, and like scaling usually means scaling up on the go-to-market side, just in terms of understanding that a little bit more. That means that you have like a good sales leadership in place. Usually, if it's in a B2B SaaS context, it's stuff that I'm personally looking mostly at. Means that you need to have like a good sales team in place, like good processes, quotas, etc. And so that's the stage where you can really scale up. And I think sort of in order to determine whether you're ready for that, you need to take a look at everything that happens in the company as it stands right now, right? So can you acquire customers efficiently? Do customers like the product? Do you have like a little bit of a playbook for these sort of the most common objections that you're encountering at sale, etc.? So there's like slight bits that you can already build on, even though your organization might not be entirely ready yet from a team perspective or from a processes perspective to scale. But there might be elements of that where you can see like some patterns, some repeatability, some like steps towards like a really predictable sales motion. And I think it's important for companies to track these early on, right? It's important, even if you do founder sales, it's important to track how many meetings does it take to get a customer across the line, even if the product's not finished yet. So I think there's like, as early as you can, start like tracking data points, tracking your own go-to-market efficiency is, I think, incredibly important, because you might not be able to bank on that, right? Because it's a sample size that might be relatively small. If you just have 2 or 3 customers and it's more anecdotals than like something you can really think, oh, like, oh, now I'm gonna put the pedal to the metal, as you were saying, and like really be able to scale. So, but it helps to build these data points early on, right? Because it's like the best time to start tracking is day 0.
Perfect. So you see those companies that you invest in today, they have more or less those kind of key numbers, of course, in that level. Yeah. Is there any key driving numbers that you could throw in for those founders now and scaling ready companies? Where does Atomico more or less?
Well, the honest answer is, of course, it depends. But that's the boring answer, I'm aware. But we're probably not as strict as you were saying earlier on defining product market fit. I think there's a bit of a difference between product market fit and really go-to-market fit. Yeah. And product market fit you can have is just like you see customers being enthusiastic about it, recommending it to their peers and colleagues, etc. So that's the stage where we usually invest, which might be that there's no scalable go-to-market leadership in place yet, there's no big processes, but it might be that it's usually around 1 million of ARR. If it's lower than that, and once again, sort of me very much coming from the SaaS world, right? If it's lower than that, it might be a little bit difficult, or there must be very good visibility on crossing that. There needs to be like a certain good growth sort of at these stages, let's say between 1 and 3 million ARR, seeing at least 2.5, 3x year-on-year growth. just to see that there's some velocity, that the product market fit actually is like translated into practice, and seeing strong net revenue retention. And strong net revenue retention can mean literally anything. If you're selling to SMBs and anything above 100% is already pretty good, particularly if your pricing motion is not yet super mature to reflect the potential upsell. And well, if you're selling to enterprises, then of course you should be like able to demonstrate like a repeated upsell pattern already. So we invest sort of at that stage where there's like bits to be seen, where you could call product market fit, but there's maybe not yet that processes, a playbook, that readiness to really hit the pedal to the metal. I think that's exactly the phase between Series A and Series B. But there's no secretive Atomico metric, and it always depends, and you can see every single number into context, but I also didn't want to go out and say nothing tangible about it.
But we, like you mentioned, it depends, but we have a number, at least for the audience, so 1 million AR or
we're not religious on that.
Exactly.
But it's at least a direction.
It's a direction, definitely, and as Maxine pointed out, it's something in the category, like different stages of scaling, different models of scaling. So, but Jakob, then again, from NGP, like you just also, there's a new investment announcement coming up, most likely. Are they were in the scaling stage, most likely. What made them attractive to you as a scaling investment at this period?
Yeah, so in this particular case, we had been tracking the company for a good 3 years, so from when they were raising their seed and now all through the Series B, and what kind of made us make the leap at this point in time was really kind of product validation. So we don't invest in, let's say, pre-commercial products, so really seeing the product out in its real-world environment for at least a year or two, and getting the customer data, the usage data, and seeing also things like the retention metrics and so forth is very important for us. So that we almost always need to see. And then the kind of go-to-market fit that was also mentioned, that's where things get a lot more blurry, and where we have more flexibility then to maybe take more of a leap or faith or not. So there the main thing we usually want to see is that someone else besides the founders can sell the product. That's really important, and then seeing a good balance in the management team, which was also mentioned. So making sure that the team actually can use the money that is invested to hit the ground running, and not kind of go out and build a new team, which could take 6 to 12 months. So you basically lose a year with that.
Okay. But you've been following the company for 3 years, and I don't even need to ask, but mainly all the founders are expected to send early and build up that relationship. So that's been now in your case as well. What was the trigger that you invested at this point? What was the key element? Was there some kind of a recontacting, or you followed? What was the trigger, more or less, that the investment happened now?
So we actually said no last year, and then through the grapevines we heard that they had picked up some good momentum, and that turned out to be true. So the things we had communicated to the team that we actually would like to see before we wanted to invest, turned out that they had actually executed on that in the last 6 months, which was basically bang on their plan. So seeing the team go out and do what they were promising that they would do is extremely encouraging for us as investors, of course, and then seeing the commercial momentum really accelerate. So those were the two main points.
Well, that was a wonderful no you said last year, because you maintained the relationship. So I guess the two elements that a typical VC said, you will get an answer, it depends, and the other one, you will never get a no. So it's more or less, it's always some kind of a protracted. So well done. Looking forward to more announcement on that side. But Andreas, you mentioned the readiness of the team and what should be at place, the marketing, so the administration. So when you join in, you invest. How much of that setup, what is the ideal administration of a company? The board is in place, what would you like to see? So maybe you continue on that. What is the ideal package, if that can be simplified?
Yeah, it depends. But I think in terms of the ideal setup, I'm part of our venture fund, and we invest predominantly in Series A stage. So for us, it's totally fine if it's still predominantly founder-led sales, that we were talking about earlier, right? Also, what you mentioned. It's totally fine if the founder is still sort of the main selling points, as long as there's strong product market fit, as long as sort of there's like elements and they also the founders realize that at some point they need to scale themselves and build up like a good sales leadership, etc. So that's probably, but that's the bare minimum. It's like, well, you have like founders in place and like a good leadership in place. Ideally, at the Series A stage, you have like, besides the founders, one or two really good hires at least that are, even if they don't have the C-level title, maybe, ideally probably actually they don't have that, but like are potential divisional heads that can scale with the company for the next few phases. But that's something that would be ideally there. Once again, it depends. It doesn't necessarily need to be the case. But just looking at the two last investments that I have invested in, one company, there was like one person besides the founders actually who was part of the leadership team. SaaS company that had a CPO and a CEO of the founding team, and then our CTO basically sort of was part of the leadership team, but the person was hired as an employee. And then the other company that I looked at, they had like a little bit more of a complete leadership bench. And what turned out to be the case is that there was a couple of leadership changes that happened. So even if you think you have sort of the right scale-up team together, you might not actually have that, because things might always change. For us, it's not necessarily a precondition that there's like a full-on leadership bench. For me, it's also totally fine if companies come to us and say like, hey, we're going to hire our VP sales, our first VP sales, we're going to make that hire with the Series A that we're about to raise. And ideally, you might have already kicked off the search of a few profiles that you're already talking to, so that you're also like full and ready to go, because the VP sales search can take quite a long time. And you were mentioning a board as well. Well, usually sort of at the stage where we're investing, there is a board. Once again, it's not a necessary precondition, but usually there is a board, because we invest after seed funds, and the seed funds are usually the first ones to kind of grow the board.
You mentioned these change of two key people in the sense. Was that an initiative or recommendation from you, or was that a reflective discussion or led by the founders?
Led by the founders, actually.
Okay.
Which I think is only because they know them a lot better. I think for us it's so hard to judge from the outside with our limited interactions that we have with the portfolio companies, right? I mean, I would say I'm arguably close to my portfolio companies, but I'm speaking to them for like an hour a week to various team members, right? It's like such a small insight into what's happening into a company. The founders know that so much better than I do. I would probably never, like, unless there's massive misconduct, I would never directly recommend to get rid of.
Exactly. So the expectation there is, of course, the independent, but your shoulder to lean on, or someone to reflect on if so needed. But of course, the expectation is to have the team in place. Jakob, as well, your latest investment, that's a good example, which you just made. What was the readiness there, the board and the setup? Like, what is the current status, and how will you develop it in the near future?
I think it was actually one of the most mature teams that I've at least been personally involved with investing behind already at this stage, at Series B stage. There was, for instance, in the board, there was already an independent chairman involved there. The whole management team was built out, so no role to fill even. But I think for us more broadly at Series A, it's okay if there's a single point of failure in a way. There's just more ambiguity in many senses, but then for Series B, if there is a single point in failure, that certainly does raise a bit of a flag if the scaling readiness truly is there. So that is something we look for. And then the interesting thing is you can also read between the lines is who the founders go out and hire, which you don't get if they haven't hired teams for the management. So that is also something we look at pretty closely. It doesn't have to be that we agree that that's the best fit for the role, but just understanding the thought process they went through when they made those hires.
Right. But so the core team and the leadership there, it's more or less there, and investing in that, no bigger changes, and pulling the pedal and trying to gas on the current one and building on. Okay, so but as you mentioned, the B round, the later stage of the scaling as well, you can expect that it's on a good level.
And that was more of an exception almost. It's pretty rare that we see that kind of a stability even at Series B also. So,
But then with Northzone as well, so when you join in, you have some expectation of the management, administration, and the whole package. So what would you say in the additional like service? You see the need. So what does Northzone typically do? Do you outsource the recruitment, and so do you have the Northzone toolbox of different services that you onboard the founders with, or what kind of services do you typically provide and support the team?
Feels like I planted this question because if there's anything we've done over the past 2 years, it's build out our platform team. So we basically have, as many people as we have on the investment team in our ops team. And so we literally do onboard our founders. We go like, hey, here are the marketing people you can work with. Here's our team of 5 in-house recruiters. Tell them what you need, they will work with you. Here's the legal team, here's the community team, and XYZ. And then these people are kind of, beyond us as investors on the board, in weekly or daily or monthly touch with the founders, depending on what they want. And so the founders will never outsource hiring. I don't think anyone should ever do that. But we can help with, when it's a big company, when you're approaching 100, 200 people, if you want to hire some tech resources, here, we work with this agency, let them work with you. So there's like levels of scaling up. But I think the difficult part, and I want to add this to what you guys said, is that the two things that we see across all companies is that everyone hires a VP finance too late.
Yeah.
Reporting is so important. Linking reporting to your KPIs, linking that to the board, extremely important, and it's very difficult to do. When it's a bit too late, it's going to be a massive headache. And the second thing is that people tend to, for some reason, be really keen on kind of staffing up on HR and talent really quickly because it's like very trendy to have a head of people. And that's perfectly fine, but what that does to an organization is that it creates a lot of expectations and pressure on their work. So people who come into a company where there's, an HR team and people handling people, apparently, or all of a sudden there's going to be expectations on career paths and on development talks and on structure and all of this like very kind of the corporate way of doing things, which should come, but some startups I think do that a bit too early and that puts unnecessary pressure on the work. So a lot of what our ops team does is kind of advise on these things and just go like, we do bi-yearly, twice per year, not every other year, check-ins to kind of look at the whole C-suite. How is it working? Are you missing anyone? Should you promote your head of or VP to C and just like do like a regular check-in? Which makes sense. Everyone should always do that.
Well, it sounds like the Northzone model, like a soft landing and offering that kind of service and reminders. So, it sounds like the work has been going well. And then, as you mentioned, finance and recruitment, the two of the most key elements, more or less, for the scaling part and reminding of those needs. So building up that. Any part from addition from the Atomico and the experience so far, scaling. So biggest needs that you see that you would like to onboard right away, internally or externally with the company.
Good question. I think once again, coming from the sales experience, a really strong commercial leader is relevant and can really massively transform like a sales organization. There was a little bit of a question, and once again, there are no perfect answer on where we should first start to hire a couple of BDRs and AEs, or if you should start hiring the VP first. I think it always depends a little bit on which caliber you get, which also fits to the rest of the organization. And if you need someone who manages a team straight away, or if you need someone who's been kind of like doing sales, finding still the motion, I think it depends a bit on the culture of the team. But I think strong commercial lead is something that I've seen sort of being one of the most transformative hires. If that person is really, really good, it makes such a big difference to the scaling journey of a company in terms of building up the ARR, in terms of getting in new customers. And then also sort of the good thing is that sort of if you have more customers and you have more feature requests, it also puts pressure on the product organization to deliver more quickly, etc. So I think, in addition to what you're saying, I think the VP Finance is great to free up founder time. I think the VP Sales is great to really be able to scale up the organization.
Definitely. Well, it sounds like more or less like the package there as well to serve and alert the founders and those now preparing for the scaling. So it's more or less you being there as the friendly reminder and the link to forward. And NGP as well. So it's more about the financial part. You are experts on that side, but is there anything additional like the special service that you offer when more or less you join in as an investor as well? So is there anything specific that you onboard the company with?
I mean, what we usually do after we close or just before closing a new investment is like we actually do a presentation to the whole management team and sometimes the board also in terms of our due diligence process and our findings, and really use that as a tool to make sure that we're aligned on where the gaps are in a way, and then kind of focus the priorities according to that. So it really depends on the situation and what we find, and then we use that as maybe the broader umbrella tool then to make sure that we're all going in the same direction, and we don't start off with people having different expectations or.
Okay, well, good. I think this is the highlights, the teasers, a good excuse to come and reach out for the investors and those ready for scaling. Thank you so much. Like, give a big applause for the participants. Thank you so much for joining.